that.
That's okay, Scott. So I want to welcome you back.
Thanks for having me. Really appreciate
All
you
right.
having me back, Dale.
So I was asking people, I was talking about you as being an expert in harmonic trading, and someone said that at first they said you invented them, which you can't invent laws of nature, right? Unless you're God. And we know you're a man, right, buddy?
The story
You
of it all,
discovered them. You
pretty
discovered
crazy,
them, right?
but
Go ahead.
I identified a number of things. Now, I didn't invent the wheel, but I improved upon it.
Gotcha.
And you got to go back to the old time technicians. You got to go back to Wyckoff. You got to go back to Gann. You got to go back to Elliott. Bob Prechter is famous for interpreting Elliott's writings. Elliott doesn't get the due a lot of times that really he should receive. Now, there's other people doing these measurements, people combining Fibonacci with Elliott wave. There's even a harmonic Elliott wave. But in terms of harmonic patterns, okay, what I did in my book in 1998 was define rules. I created most of the patterns, some of the patterns other people were using, but they did not establish rules. And that was my motivation, was that I recognized that these M and W patterns were not the same, and along the way ran into just an incredible amount of, I would just say, less than scrupulous individuals lacking a lot of integrity.
It's a jungle out there, buddy.
What's that?
It's a jungle out there.
It's a jungle. I mean, that's the industry, no doubt. And that's okay. I have a unique story. I'm going to be sharing that very soon, is why I give away a lot of the discoveries for free. Just recently, I made my harmonic analyzer, which is the first harmonic pattern software ever created. I made that as a free software so that people can learn the right way. The harmonic patterns.
That's so cool, Scott. That is so. You know what? We're kindred spirits. We have a mission. I'm telling everyone to go see the movie The Martian, because the key line for me. Did you see the movie?
Yeah.
If not, you got to rent it. Okay. The key line for me was near the end where Matt Damon did not know if he was going to make it back or not, and he was telling someone to speak to his parents in case he didn't. He said to do something big and beautiful, even to die for something greater than myself.
I agree with that.
It's your legacy. Your teachings are your legacy.
It's the work, this is the work we chose. This is the industry we chose. It's not a job. This is a lifestyle. I would be doing this until the day I die. But it is always the work that I tried to put forth in front of myself. I never named a pattern after myself. I never named anything after myself, because it was always about advancing the knowledge base of technical analysis. I've been able to interact with some of the top people in the industry that have given me fantastic advice. People in the Market Technicians Association or American Association of Professional Technical Analysts.
Sounds like we have the same retirement plan.
What's that?
Slumping over on the keyboard.
I'm going to be here
when it's over
the keyboard, because this is what I do. This is what I love to do. This is
right.
And I love what you do, because there is a real differentiation line, and you're here. You've got your 10,000 plus followers that are all real, and you're doing it every day, and you're showing it. And those kind of communities are not only emerging, but they're lasting. The problem has been is that a lot of other marketers have tried to jump on what are the best aspects of harmonic patterns, and to make that quick education buck, and a lot of them have success. They don't last very long, but that's not my motivation. My motivation is the community, is the exchange of ideas. It's to interact with people as a payback for those that helped me. And that's why I give away, as I was saying, there's a free book. My first book, The Harmonic Trader, I give that away as a free download at harmonictrader.com. Now we have the free software, Harmonic Analyzer. It has free daily data from Yahoo. Go to harmonicanalyzer.com, download that, get that free. Because I really feel that the education, the basic education for at least getting some skill set has to be free. We cannot discriminate against people if they don't have the money. I get emails from people from Africa, from India, all over the world who say, look, I make $2,000 a year. I can't afford $100 a month. And so I have sufficient resources to help people to learn. We now have the Formation Seeker software that it's the best software program, harmonic pattern program in the world, bar none. Something we've optimized for the past year and a half, and we make that really easy. You know, if you go to www.formationseeker.com, we have a Try It Now button where you can click and go into the program for 15, 20 minutes, no credit card required. And I think this whole monetization that these internet marketers have done with very good market ideas has kind of created a lot of confusion, because there's great work out there. But the problem is avoiding that learning curve trap of people who are trying to sell you a $5,000 course and you walk away with no skill sets. And
so how do people know, Scott, how do people know? Because, you know, there are, you know, I can see the point, and I've had it in my career. Currently I have a model where I don't have to have subscribers. But, you know, some guys may be very knowledgeable, but they're not wealthy in their own right. And they need to make a living too, and it can't just be their trading, or they'd have so much pressure on them they wouldn't be able to be a good trader. So, I mean, how is someone to know if they are spending money for a service that it could be very well worth it? You know, for example, someone I've interviewed charges $33 a month. And, you know, we have transformed in this internet world to, if it's free, it's me. But people are also misled by things that are free. So how can you discern what is worth $1 and what might mislead you just because it's free?
That's a great question. I think if you see somebody in person, I've been asked that question before, and they say to you, okay, you know, great question to ask somebody is, all right, what was your last trade? Like if you're go to an interview or you're talking to an educator, what was the last trade that you pulled? That's a little question I like to ask educators of, you know, and why. But I also feel that there should be sufficient real-time demonstration, especially in today's world, that people are demonstrating their strategy, their methodology, where they're able to tell you from start to finish, identification, execution, management of what their process is. And I'm a big believer in process, of creating a process, no matter what measurement tools that you're going to use, that you're able to define the identification of the opportunity, the price level of the execution, and have some kind of management plan before you get into it. If somebody can't demonstrate some kind of process, and in their content they're not doing it live, or they're showing examples from 3-4 days ago, and Harmonic Patterns is ripe for the picking because they're fantastic measurement tools. not all
And it may
harmonic
take a
patterns
few
are the
days
home
for
run
them to manifest.
situations.
And it may take a few days. You could show a harmonic right now that may take a few days before they manifest. So that pattern is good until violated. But there's one point I want to bring up, and I know you've experienced it. Anyone in the industry has. People will come up to you and say, Scott, what do you think of the market here? What do you think of the dollar here? Do you think gold is a good buy? And they have the expectation, while they pay their doctors, while they pay their accountants, while they pay their attorneys, that what the value that we have, we should just give it away for free, when they're willing to pay everyone else for any kind of service. But because there are so many of us, everyone expects us to just, it's our profession. You put in tens of thousands of hours to come up with educated ideas, and people do not value good analysts' opinions in the market. They expect it for free.
In today's world, yeah, and then anything that's, your forum here is the standard of what should be happening, but it's the exception to the rule. And so yes, there's a lot of kind of confusing.
So what I'm saying is, I can empathize with the professional who is good, that still has a fee service, because they put in the hours. They've lost tens of thousands of dollars becoming proficient at their trade as a trader, and that has value, and the value is also monetary value. So I understand how a lot of professionals feel that people want them to give everything away, when they wouldn't be able to get a diagnosis from a doctor, or have their taxes done for free, or their attorney not bill them by the hour. Do you understand what I'm saying?
Yeah, that's a great point, and believe me, I've been spending a lot of time with lawyers lately. And
sorry, buddy.
I really have, and I've got a number of lawsuits actually lined up, because a lot of people don't realize I created the harmonic patterns. I created all the terminology. I trademarked and copyrighted everything, not because I wanted to sue people, but because I knew that these ideas needed to be protected. And I've been enforcing those trademarks for a while. But, I was always encouraging people to share the information to help each other. I agree that professionals and people that are putting hard work into their materials, they should definitely be paid. I have a service, I have software programs that are more than worth the price that I offer them at. It's not my primary business, though. But I do feel that there is a distinction, especially how this industry has evolved over the last 15 or 20 years. I started Harmonic Trader, the website, harmonictrader.com, in 1998, and the whole educational industry was emerging from this kind of mystique, cult-like phenomenon where if somebody was revered, it wasn't quite understood why they were revered, but they just were, and they sold a mystique, to now where it's more of a meritocracy. And I believe that you have to put up, present your ideas. You have to be close to being right, which a lot of people aren't even able to be close to being right. And then be able to share those ideas sufficiently enough to where somebody can make a solid assessment of your work to see if it's value added, to pay for subscriptions, what have you. And in my efforts in the last few months with lawyers, software vendors, a lot has happened, Dale, since we last spoke. And what I've done is organized the entire harmonic trading, harmonic pattern community to bring a standard, much like Prechter and Frost did when they interpreted R.N. Elliott's writings. Now I'm organizing a global effort I'm actually the keynote speaker next Friday night in Krakow, Poland at the FX Cuffs conference. I will have a considerable number of my team members globally, Asia, United States, Poland. We will live stream that, and there will be updates. I'll send you an update, but I'll be live streaming that presentation. It's a 2-hour presentation, and I'm really excited to do that because harmonic patterns are the quickest, according to many brokers, many software vendors. They are the most popular or most frequently requested subject area for a lot of the programs. And I have created the Harmonic Pattern Collection as a third-party program for most of the major platforms now, as well as having the Formation Seeker, which do it all. And we make it very easy for people to see how important the measurements are, that simply this information can no longer be ignored. And the other thing that I've done is I've been way out in front of this market decline. And over the last year, I write a monthly letter. And last year, I was talking extensively about the fact that the S&P 500 reversed exactly, the SPY ETF reversed exactly at the bear market 1618, meaning the bear market from 2007 to the low in 2009, that entire distance projected, multiplied by 1.618 on the SPY, that 1618 extension measurement was at 213.40. The SPY reversed on the exact day it hit that. It reversed at about 213.78, and on that day, that was the top at that 1618 weekly extension. That's one of dozens of daily, weekly examples in currencies, futures, gold, commodities right now that are marking incredibly significant inflection points. And the whole thing about what I've done with harmonic patterns is to present not only a methodology of understanding where you are in the decision process, but really optimizing pattern structures with exact measurements that define and differentiate pattern-specific situations. That's how I differentiated the Gartley, created the bat, differentiated the butterfly, created the crab, and then went on with the 5-0 and the shark and the other alternate structures. But all of these are my attempt to be precise, uniform, define a process that takes away subjectivity and really focuses on the power of measuring the market. No matter what you're doing, I'm not here to say my thing is better than anything else. It's what works best for me. And I encourage everyone to take a look at a bunch of different approaches. That's how I really was able to make the advancements. I studied Gann in detail, studied Hurst, studied the Elliott wave stuff, although the structural wave counts wasn't really for me, but structure in terms of understanding that, yes, these movements repeat was a powerful improvement, a powerful advancement in my thinking of that I need to measure the market at all times. And if I measure the market, I know where I am on the map.
Okay, that's a very valid point. And to make the transition of this being testimonial and a bio about your work and the history of it, they say a picture speaks 1,000 words. You say we're at some major inflection points. You forecasted accurately the high of the S&Ps. Perhaps you could share a couple of these critical inflection points that you're talking about in the market by using the screen share on the upper left-hand corner. And
sure.
Show us a couple of looks. You don't have to give it all away, but just to give us some type of background macro-wise, what you mean by major inflection points.
Okay, let me. One thing that I did at the end of last year was that I was able to release all of those reports going back from 2015, and that is available on my website. It's available on my Twitter, Facebook page. Let me get that. I'll pull that up and so we can show everybody that you know, there was many really critical market reports, and let me bring this one up and show you.
So you know how to screen share, you go to the green box with the white arrow on the upper left-hand corner.
Hang on a second here.
Because a lot of people were surprised by the break. You know, I was there with VIX derivatives on that for initial break in the S&Ps, and a lot of people that missed it are wondering where's a good place for me if this is the beginning of a 20-30% correction in the S&Ps. Where's the right time to step in? And the minority opinion is that there still could be one more push up to new highs above 2200 before we complete for another decline. So I'm interested in what you're seeing in the S&Ps and possibly the euro or the dollar, the Dixie, because it's my view, I don't know if it's yours, I think it's been proven by the market being in turmoil because of what was happening with the devaluation of the yuan, that the currency markets are the fulcrum and they're the linchpin of everything that happens.
You know, I agree with all of that. I think the currency markets are probably more critical now than they've been in probably since the '82 Latin American debacle that almost took the markets down in '82. It's you know, I lived in Brazil for a number of years. We just moved back about 2 years ago, and it's incredible what's happened there because that currency has lost more than half its value. But I want to just show. Let me just show a couple of important inflection points as I was talking about. Now, I just go through. This is my August report, and let me first talk about crude oil. Now, I have been talking about crude for a while, and the critical aspect of the crude market was the fact that let me increase this here. We can blow this up. That I was defining for a long time the $38 level as the critical make or break. I had done some work even up here, and looking at the XLE as that was breaking down as well. But let's talk about major patterns. So that was oil. I'll come back to oil in a second. So here's something I've been talking about for quite some time. Actually, I've been talking about this bat pattern. This is a pattern that I created, which is a different W-type structure that ever since the breakout above 2800, that was the only target. Now, we have this structure up here that defines essentially the 4700 to 5000 level as our important resistance. But this basic structure, this pattern, that's a 15-year pattern. Those kind of patterns are not to be ignored. And on any time frame, the process is still the same. But that was the first, probably the most significant of the structures long term that had me really considering that this retest of the 5,000 level in the NASDAQ was something to be concerned about. Here is NASDAQ 100. It's a slightly different structure, resulting in typically a higher retest, which we had, and we have since then we have retraced off of that. here's a great pattern in the spread between the composite and the NASDAQ 100. Basically, when the composite was advancing over the NASDAQ 100, that was usually better for a broader market rally. But we had some perfect long-term patterns. There's a regular bat pattern with all of the required ratio alignments that defined that cyclical turning point.
So let me ask you this, Scott.
Yeah.
I know you're good. I know your work is good. But this, to me, is still yesterday's newspaper. Where are you at with the markets, the way they're set up now, going into the NFP and the ECB and the Fed in March?
Yeah,
do you have any
definitely.
views?
This is the preface. It's a major preface point, and I'll get right to it after I show this.
Okay.
So this was the report. This was the SPY. This is right there at the arrow. That was the 1618 weekly extension of the last bear market. So we come off of that, and
I'm not trying to be tough with you or anything like that, Scott. This is such a good interview. I want to make it publishable. Okay. So the way it's going to be publishable is if I have some view of what's happening in the markets now and going into the future. I really can't report on what happened at the end of the year or last summer.
No, all of this is relevant for what we're dealing with.
I just want to give you a heads up.
Yeah.
I think we have 12 minutes left. I'm not sure if there's someone behind me. Adenda, are we clear till the top of the hour? So I'm asking if we're clear to the top of the hour. We're not. So there's one after this session. How much time do I have with Scott? Oh, there's no one. Okay, yeah, so go ahead, Scott. We have 10 minutes.
Okay, great, and that's all I need. So now we jump forward. Now we had the retracement pattern. This is the Gartley I have been talking about at 2100. This is defining everything that we've had so far. And this is the retest of that major measurement from back in July. So now, I mean, not only do we have a major weekly measurement, now we had a retracement pattern that was retesting that high point with all of the perfect scenarios, measurements that define that resistance. So what does that mean for now? That means for now we're squeezed between that pattern, the top resistance of that pattern, and then down to this low of the August low. So then let's go to where we're at currently of, let me bring that other one up really quick. Let me bring up, actually the easiest way, just bring up Formation Seeker. And
so this Formation Seeker is a free tool you're giving away?
No, this is a paid service, but if you want to log in for free, you try it out, you can simply just go try it now and join, and that gives you 15-minute, 20-minute access to peruse everything that is in here to give everybody a fair chance to check it out without needing any kind of credit card or whatever. But let's look at S&P right now.
This is
and let's go. So right now on this daily, here is the there's our Gartley. Okay, so remember this X point, that was the exact 1618 from the bear market, followed up by a Gartley pattern. We're obviously being affected. The market is respecting these patterns. They're giving us clear measurement basis of what to expect going forward. We know that this is an important top not to be questioned. We know that that top has been confirmed. as I was outlining in those reports, of looking for that secondary retest to confirm this from a long-term basis. So now we're struggling. We're struggling to maintain these October lows. That unto itself, the fact that we've already had some issues here, we're coming down for this test, that squeezes everything that we need to consider about the long term in this range of the current resistance up here at 2090, 2070 versus these lows down here right there at 1830. So to answer your question from earlier, could we go to a new high and then form a bear market? According to what I do, no. According to what I do, we are already in the beginning stages, early stages of this larger decline. If this is going to be the third bear market in the first 16 years of this century, it's already started. And we know this by this completed pattern here, and we know that once we take out these levels, we're going to see a much larger continuation, probably as much as a 382 pullback all the way back down. If we're going back, let's go on the weekly, because that's
1550. 1550.
Yeah, and that's where we can at least then have an understanding of, all right, there's something really important up here, and you don't even have to know harmonics, harmonic trading, harmonic patterns. Of just understanding that, yeah, we are looking at something that is different than anything else that we've dealt with in the last 7 years. So a minimum 382 retracement comes in at about 1580, 1575. And
sorry, I was off a little.
That's and I am somebody that likes to explain the measurements that get you right in close to the ballpark where you understand kind of the environmental character of the market, that we know that this top is not just a simple pause. We've got a number of technical factors here that make this significant. This secondary retest being confirmed is also another important factor. And clearly, these obvious lows at 1830 is what everyone is looking at. So we are squeezed currently between that 2070 and that 1820. Now let me post one thing that I had 2 days ago that is brings in even another level of kind of importance to where we are, which is this current 4-hour pattern. And this 4-hour pattern, really nice, is one of the patterns I created, the shark pattern. This impulsive explosion up here and this structure going back to the end of January really defines the next continuation point. One of the things that I've just released is something called Harmonic Strength Index, inspired by relative strength, the Wells-Wilder. What we have done is try to reconstruct the formula, but we really broke it down. We took apart various pieces. We applied important harmonic measurements, the 314, the 1618, creating a bias, like a harmonic bias, that measures what we feel is an environmental indicator that gives us some type of degree of how far the market has moved, especially as it relates to the patterns. So the Harmonic Strength Index confirmed this 4-hour high with all of these aspects here. Now we did get that initial reaction.
Well, markets rarely peak on confirmed momentum highs.
No, definitely, but the combination of the two, there's a few things happening here that reinforce this immediate level at 1965, 1970 as the next continuation point. So we are within 10 points of this retest, and if you are subscribing to that bearish scenario, this overall long-term continuation should be continuing very soon after a failure here to go to new highs. We look at that. The way that I break that down is I treat every approach, every kind of situation as if it was a trade first and foremost. So if I'm looking at this as a trade, my initial entry here is at D, and looking at that 1969 is the critical top end of where we'd be looking to execute.
Okay, and if we got through there, do you have a price measurement if we get through there where the next objective would be?
The next objective above here, if this fails, is a full retest of that 2070 level. But there would have to be something very significant unfolding for, if we go back to that here, where that's what I'm saying is that all of these structures and patterns are narrowing down the realm of possibility. That we are at a point here that if this is going to continue lower, and this is going to be more of a devastating bear market for 2016, we're looking at really this area at 1970 being our next inflection point lower.
Okay.
Otherwise, if we don't hold, we will see that larger retest at 2070. But even if that were to occur, I'm still of the opinion that these are the highs. That unless this was to be violated, broken out, we are squeezed into a very tight area where the number of possibilities are limited. And I'm still respecting these patterns. I'm of the opinion that we are, the longer we fail to make a dramatic recovery or return to even challenge the prior all-time highs, the more likely we're due for this 382 correction down at that 1580 level.
Yeah, because it's been what, 6 months or longer since we've seen a new high, or maybe even 9. I'm not even sure. I think it was last May. Maybe we're coming up on a year without a new high, which hasn't happened for, I don't know, decades.
Yeah, we had a number of very interesting things happen first 6 months of the year. Yeah, that was May 18th was that high.
Okay. Right.
And the first 6 months of last year was the least volatile 6-month time period in 100 years, which I find very interesting. That kind of character that precedes a major reversal point is almost ideal for looking at a situation where you expect some type of considerable change. So when we apply measurements and analysis, Elliott wave, other indicators that are confirming what maybe that larger story is indicating, that's when you really do have something of importance and of value that can narrow the field of possibilities to where you understand that there's really 1 or 2 scenarios that you need to be mindful of. So currently, looking at where we're at, we might be range bound for some time. Personally, I think we're going to see this larger acceleration later in the year, but we do have a number of structures, a number of these patterns that have reversed in ideal fashion. For the NASDAQ, like I said, that was around 4,800, generally 5,000. The S&P, the Dow is even worse shape, where the Dow has sustained even worse damage than the other 2 indices, where that has really, here's the bearish bat pattern that faced, and that was pretty significant. And again, despite this corrective move down, we have stabilized a little bit here, but nothing impressive. Nothing where it would say, okay, that's extremely oversold, and we get a sharp bounce that might be the next long-term continuation leg. That's not what we're seeing. I just want to show one other quick, some of the really important European indices. One is definitely the FTSE was really a critical pattern that has fallen off recently. And the interesting thing is when we look at all of this, we look at what we're talking about is comparing the recovery of the 2008 bear market to what has currently happened. And when we've made progress, like I showed, we were able to extend up to the 1618 extension on the U.S. on the S&P 500. But when we look at European indices, much like here the FTSE 100, same with the DAX, is despite everything that they've done, we reversed exactly at this 113 extension, where we actually set up a significant long-term divergence. And these kind of signals provide the backdrop against what we're looking at for the future. So if we understand that, hey, this recovery from 2008 up until 2015 really wasn't all that much, this actually kind of reminds me of the S&P 500 in 2007, 2008, where it didn't make much progress above the 2000 high. But we understand that the longer term action that we need to consider, kind of have as in the back of our heads, what's the major trend? Is the trend up or down? Well, that tells me that the trend is still well established and down in the FTSE, in the DAX. And I'll finish up with one other thing that.
How about wrapping it up with the euro or a currency, since this is FX?
Yeah. All right. Let's go to euro, because I think that is definitely an important currency that's affecting a whole number of issues. Now, that's not the one I wanted to show. Let me go to the daily chart, because the daily chart is another pattern situation. There you go. That is currently defining everything. So this is something, a bullish bat that I had posted actually on the Facebook feed as this was completing. Yeah. Now, the important thing with this pattern right now in the euro is I consider this pattern kind of a consolidation pattern, a relief pattern, if you will, to alleviate that downtrend of most of last year. But we have the ideal harmonic pattern scenario where the first test of a pattern is usually some kind of sharp, aggressive move. And typically, we do have some type of secondary test. Now, this is acting the same way if it was a 5-minute trade or a 15-minute trade, where our process is we identify the pattern, we take partial profits at one of the two targets, usually the 382, that is measured from the pattern from A to D. This is a 38.2% retracement. We take automatic profits here and then look to secure at the 618. Now, we had that process walk through, and now this is reversed. And actually, we have violated, this is a very significant uptrend line off the low. And this violation right now tells me that we are in the process of retesting this entire 105.50 support area. And that's a very common process that harmonic patterns go through. And this would be the true make or break point. So clearly, euro trending lower until we have a full retest of these lows. These two targets, absolutely critical, and define, how far this pattern could go in this short period of time. And that on a weekly, we stretch that out. Let's look at the longer term weekly, that we don't have really too much in the way of if this 105 fails. And so that's why we're continually getting squeezed into this consolidation zone, that if, especially on this next retest, if we violate 105, I mean, we trade 104.99. There's nothing down here until 96. That's going to be your major continuation point. We have this deep crab pattern, but really what's at stake at 105 is not only 90, 96, 98, but we're looking at a full retest of these, the down here, the 2000 lows. This would give us something as low as 87 or 90 level, but that's how tight, that's how critical these levels are of exactly where we are in terms of the big picture. We have squeezed over the last 6 months. We're about to resolve this zone, and I feel that it's still down. And the last one that I'll talk about is the British pound. That's something I've done a number of posts on, had been talking about it in my monthly reports of why I felt the pound would go to 137, and I had been talking about that since, really the 149 level, as this was violated and broken down. On the weekly chart, really the only consideration we need to be concerned with is this full retest. We just hit the 886, literally right now. We're hitting the 886.
That's something I started to use after our last interview. Thank you. I never used that before, but I've seen it play out. So thank you for that pearl.
I would look at that and also recommend the inverse of the 113. Two excellent measures that I developed with the bat pattern and a few other structures, but those are really effective in gauging areas of support and resistance. With the pound, we're really just still accelerating much lower. We've already violated some significant structures here where there is not much that's giving us, there's really not much sign, even though I would love to be a contrarian and say we have an opportunity down here. Even in the Harmonic Strength Index, I don't have anything constructive. That is, I would love to see a secondary confirmation of the low. So we're still trending lower. And sometimes simple trend lines are your best friend of just understanding, even if you're new to all the advanced type of measurements, if you can draw a trend line and just respect that trend line as a starting point, that is unto itself one of the easiest ways to understand, okay, am I up or down? What's the trend say to us? Let me give you one last thing and I'll let you go, because oil has been the other really enormously significant situation. Now, I've outlined this crab pattern right down here, and this is in West Texas Intermediate at this 29 level. And I think this might be at least the start of some stabilization here in the HSI. That gives us some kind of, that's a much better, more constructive, bullish pattern. But I'm still not going to really seize upon that opportunity until we break that downtrend. And we're close. This is, I think we're probably going to go through some consolidation here at the 33 to 30 level, and it still needs time. But this is a great way where we respect the trend, and we make some progress out of this trend, then I'd be more inclined to say, okay, we might have something here in oil. And that is important in terms of integrating the basics with maybe getting a little more advanced with your measurements, if that's Elliott wave, Fibonacci, harmonic patterns, but bringing together multiple readings and measures to confirm what you're looking at. So in this situation, I would love to be a contrarian here. Oil dropped from 110 all the way down to 26, 27. At some point, we're going to have an opportunity down here. And it's getting close. It's getting close in those currencies, but they all need time. And I think that's what we need to look for here in the next few months. I think the broader market, the S&P, that needs time as well. But we are very close that, you know, in a lot of these areas that if they start to break out of their trend lines, if they start to exhibit some kind of change in character, then we might really have a substantial contrarian signal. We're not there yet, but you know,
how about on the equinox, March 23rd, I believe? You're a GAN guy. You know, I've seen a lot of turning points at the end of a season, beginning of another. I'm hearing from some cycle guys mid-April. Could be even from a year ago they were pointing towards this April. You have any time? Do you do any time work with your patterns?
I do time work on that. I prefer to create. I look at the general time zones, and I'm looking for symmetry. I like to look for symmetry, and there are time limitations. In terms of time, we are certainly at that point. I feel that if this is going to do it, it's got to do it now. If we don't make any progress against this downtrend, you know, that's going to really push everything out onto next year. For example, if the euro violates 105, that means we've got a lot more work to the downside, and you pretty much stick with that trend for the rest of the year. Same with crude, same with even equities themselves. So a lot of these are at that point where they're challenging these long-term downtrends, and in comparison to what those downtrends are, especially say in the crude market, we're going to get resistance. I mean, everybody's looking at that downtrend line, but we are at many points. If it's an overdone pound, or if it's an overdone euro, or if it's gold, you know, gold is very close actually to finally giving us some constructive evidence. It's still early, but I feel like we are close to being able to consider that maybe on the long term, in a few months, maybe later in the year, and here's gold on a longer term basis, that again, we can start thinking about it. I've been very bearish personally. I thought gold was going to 800, and there's that downtrend in gold right there. Until we can make progress against this downtrend, we're still in a downtrend. But I would want to recognize these signals early and begin to start to anticipate them. We're not there yet, but we're at a lot of make or break levels that would get me thinking. And I've been bearish on gold, I've been bearish on oil extensively, I've been bearish on equities for quite some time, and my gut reaction is that they all need more time at lower prices to present us this opportunity. But it is getting close, at least to where we're going to be early, but we can start entertaining those possibilities. And I feel that's what measuring the market, whatever you do, however you measure the market, as a trader, trading off of charts, relying on chart analysis, technical analysis, that's what I tell my students and recommend to anybody that I talk to, is that whatever you do, measure the market so you understand where you are on the map of the price chart.
I measure this interview, Scott, as fantastic.
Thank you.
And really, so much. I'm so glad that you opened up to sharing some of these inflection points with us, and your work is outstanding. I encourage everyone who's watching you live right now to check out Scott at www.harmonictrader.com. His Twitter handle is @harmonictrader. Thank you so much, buddy, for coming back and checking in with us, and what a great mission you have to help people. You know, they say that we reap what we sow, and you're sowing great seeds, Scott. Thank you so much for hanging out with us today.
Thank you, Dale. Thanks for having me back. I really respect and you know, anything I can help you or your followers. Really, you're setting the standard. I want to set a standard here that you know, changes the game, and I feel that we have this opportunity. So thank you, and anytime I would love to come back, and you know, I want to share the free resources with your members. You can review them at the Twitter or any of those websites, and you know, if you have a question, anybody has a question, you can send an email to me at harmonictrader@harmonictrader.com. So thanks so much, Dale.